let her get rolling.
All right. Good morning, everyone. Happy Tuesday.
Hey, guys. All right. We'll get it rolling here. We're a touch behind schedule here, as sometimes happens. But we're trying to get to about 20 before we start. We've been, I think, people popping in and popping out because we hadn't started on time. But we'll get started here. Well, let's go ahead and give it a rip. All right. So first up, just to remind you guys what we're doing. We're looking at traditional assets. So essentially, members will submit anything and everything that's not crypto. So it's wide open to anything that interests them. And the process, I think I've described to you guys. We ask the members to post what they're watching, where setups that they think may be appropriately timed for consideration. And then, as I will often tell you guys, it's both a way for us to review their progression as technicians, as well as to essentially be scanning for setup. So you've got hundreds of people approaching the market with the same technical approach, looking for these kind of setups. And as I've often said, some of the best trades I've had over the last couple of years have come from members because I can't watch everything. And often they'll nail something here. So this is the great segue to start here from Grant F., who's he's been with us for some time now. And what you'll notice with him is, as he often does, if it's there, he'll post an Elliott count, but he'll lay on top of it a harmonic. So now we have the classic Gartley here, which is the first harmonic that was, I think it was the first one that was kind of identified as a repeating structure. And then Scott Carney took it from there and developed all the additionals. But the Gartley here, one thing that I'm often careful of with harmonics is I prefer the dominant pivots here rather than something just kind of randomly chosen where you get a fib number here. Well, this is not bad here as you've got the double bottom down here to kind of start it off. So I think that this valid, and then you add in what he's doing here, which is pulling from the two here, or pardon me, is he pulling from, he's pulling from low to high to give us the golden zone here. So we have a completed impulse here into the one. So 1, 2, 3, 4, looks like this could be, well, I can't get to it. You could probably go W, X, Y here, and then up we go for the extension in the fifth to give us the 1. Now here's the 3 that corrects, but it's done with the fib ratios that give us the Gartley in conjunction with hitting the golden zone. So we have just beautiful confluence here. RSI shows you that you're potentially recoiling from, let's just say below 30. I hate to say overbought, oversold, but that is the nomenclature that people identify it from. What I think of always when I see the RSI at these extremes, it's like stretching a rubber band, right? Like likely if we're going to get a reversal here, we'll go all the way back to the other side and then start that process again. But many professional traders will tell you the most beneficial use of RSI is not to try and pick turns at these pivot or when we get over 70 or below 30, but it's when we're trending, when we hold above 50 and then move up, as that's confirmation of the strength in the market. And then again, as is here, we first, right, if you were trying to sell it just because you were over 70 here, that would have been mighty painful all the way up. Right? It can stay overbought, if we're going to use that language, for an extended period of time, much longer than you can say solvent, as they say. So this is just a beautiful setup here. Oh shit, I haven't even identified the asset. I did not know this one. This is, Jesus, Billy. God, is that how I say that? I do not know this asset. Billy. It is Billy. Jesus, I have no idea what they do, but I don't need to know. That's one of the advantages of a technician, right? So even though I don't understand what they're doing fundamentally, the technician's first assumption is that all the known fundamentals that can be known at any moment in time are reflected in that price action. So we've got a technical pivot here. So what does that do for us? Well, we've got pattern. So the potential here to identify this as a completed impulse. We've got a 3-wave correction, even though there's some complexity to it. We've got the harmonic here to give us this confluence, and then we got the golden zone. Now, what that does for us, it gives us a golden corner, right? So we know, right, always, right? So I always have to say this, as long as this pivot holds, 80% probability we get here, but we don't, it's not just to the median line. As you can note here, he's got 3 targets, right? In fact, I got to go up here to give you the 3rd target. So he's got the algo target off of the golden zone here. He's got an initial first target, which would be cranking. Well, this would be the 0.618 from the high. So this would be technical confluence here. You'd have 4.7 to 1 here. Now you got 11.5. Now you got 16.9. Now look at the risk reward ratios here. it's one of those trades where you look at it and it's already giving you that little setup of, okay, if we're not going to sit here with a limit order, let's look for the reaction. Now there's the reaction. So on any kind of pullback here, actually, I mean, you could really do it right now. You're so close to that entry with clearly identified as to where this goes wrong, right? If we break the 65, even though we could break and then still go higher in this trade, the reason I say it this way is that you're making the assumption that the pivot low is in. So even though this could go lower, per this trade, I'd much rather take the stop here, take the small loser. If it's going to roll over and move down here, maybe we come down, test some of the structure. If it rolls over, I want to take the small loser and then reevaluate. Do I still like the setup as much below the golden zone? Having lost the harmonic, perhaps we extend, we get something different. But right now, and I referenced this yesterday, again, it was another educator that posted this up on Twitter, and I wish I could remember the guy's name, but the idea being you want to enter as close as you possibly can to where you're wrong, right? So that if the assumption here is that the pivot is in and we've got the golden zone, and our assumption is that if we break that golden zone here, well, obviously this is no longer our pivot. So we're entering pretty damn close to where we're wrong, right? So which is what creates all this beautiful risk reward. It's not complicated. And you really, oh shit here. Oh, let's see, can I draw on this? I mean, this area right here, if I put the cursor right here, that's the only thing I can really see that you might look at and say, well, perhaps that gets a test if this rolls over again. But right now, that's just game on. There's no reason not to take that trade if you're looking for a traditional asset. And I have no idea what these guys do, Billy, but that's a beautiful setup. Just beautiful, just gorgeous, right? Everything that we teach, right? All right there, including the geometry. So not much more I can add there. Grant does these so well. There's nothing I can really add to it. Completed impulse, 3 down, golden zone, boom, you buy it. If you're looking. So good work, Grant F, as usual. Someone's going to have to look up Billy. The hell they do. I'm curious. I may have to go to FinViz, see what they do, just out of curiosity. It's such an odd. Yeah, it should look it up because I'm curious. Okay, I'll keep moving. Mr. Jack 245. Let's see what he's got. Let me get this on here. All right. So, as is often the case, very often I don't know the assets here. Now this. Oh, Lending Club. Well, we know them. Shoot, I think at one point I had a loan from them. Okay, so look how beautiful this is. Oh, I'm going to go ahead and make a copy so I can dig in here. Not that Mr. Jax needs it, but I know when I talk with my hands, that cross cursor can be annoying. No, I don't want to connect there. All right, so let me get down here and let's look at what we got with Lending Club. Okay, so coming off of the low, right? This is just something I do is just force a habit. I want to get on that low so I can kind of really check here. Am I good here? Did we not clear? Yeah, so this is really close. Whew. Doesn't get much closer than that. God, am I on that? I think I am. We better make sure. All right, we can't touch it.
Billy provides online entertainment services for the young generations in the People's Republic of China. It's a platform offers a range of content, including video services, mobile games, and value-added services, as well as ACG-related comic and audio content. The company's video services include professional user-generated videos. So I guess it's company's
my guess. If I had to guess, my guess would be Grant F found that because he's running a harmonic scan, and that was a beautiful setup. So he found the Gartley, saw the clear impulse, and said, "Huh, this looks technically of interest." Would be my guess as to how he got it.
Yeah,
well, here I'm back on Lending Club, just to double check. That's about as close as they can get. Right? I mean, that's within a couple of ticks of that low. I'm sure he would have checked it, but it's hard at first glance to be sure. 1 2 1 2. Right, so we get a 3 4. Complete the impulse. All right, this is just a waterfall, but there's the B, there's the C. So, as I will just emphasize over and over and over again, this is really what we're doing here. It's just all the market ever does. Right? It's just retrace and. We're going to break one pivot. We're going to either break this one or this one. Right now, there can be a lot of complexity in the middle of that, as we see here. So you'd have to call that the A, 3 into the B. Oh shit! I'm out here on a 1 hour. 1 2 3 4. it looks like there's even subdivision here, but in essence, you'd call this a double top into the B, down for the C. So we've got, and you just kind of, it's not that hard to kind of look at that and say, okay, well, looks like this is structure that was tested. So prior resistance now revisited as the support. I'd probably pull that up here to include that. So you got a zone here. Often the reason I use the square rather than a line is because support and resistance is a zone more often than just a particular tick level. So I always consider, where's the support zone? Where's the resistance zone? It's pretty clear what was happening here. But then, of course, you'd want to look. Oh, let me get this here. Just out of curiosity, I'd want to pull this up, see how we look here. Kind of in between, I'd want to check all of these here. Since you're completed, you'd go here for the second. So we're in between the 50 and the golden zone, right where you'd look at it. And so if you're not going to be right on one of these, if it doesn't make the golden zone, then you'd look left and say, is there structure that perhaps prevented that from getting there? And that's the hindsight conclusion that you'd make. So at least you could understand, okay, I've got a good pivot here. And it's in the zone where I'd look for the second, and essentially I'm coming down in 3. So to deduce this as a completed impulse followed by a 3 into a 2, pretty reasonable. Okay, 1, 2. Now what do we get here? Golden corner, right? You see, so we push off into the 1. Again, it's skinny. Look, these are skinny retracements, but they're sharp. So we go down hard right to the golden zone. Right now, again, as I say, right, I can't make this stuff up. I show it. So I've never seen this chart, right? This is the first time I'm looking at it, but look what we do, right? So we blow so far through. Here was your 80%. We're all the way up here, right? Just a complete monster rip. When did that come? Oh, that's off of earnings, right? So that's the day of earnings. So obviously the market liked it. Now this is getting a little tricky here because he's got to expand the beast. Let me get into it. This is good work here, Mr. Jack. So this gets a little tricky as to you're looking at that. God, how am I going to get a correction in here when I have a 5 coming down? So you can see what he's done. And this is often what you have to do. Oh, is he in Hypothetical? Yeah, I guess he is. Okay, that's fine. Oh, you're kind of, you work backwards. So I've got a 5 here. So how do I put that in the context here? Noting here that I've hit the negative 100, which is going to be the 1618, right? Remember, because we come from a golden zone. Because we're coming from a golden zone, we know the negative 100 is going to be at the 1618, right? From 618 to negative 1618. And the 175 would be right there. So we have a solid technical target for the 3. Oh, that's really, you don't have, let's see if I go out of Hypothetical, because those are not, it's not a actual representation of the open close. You're kind of stuck with this. You look here and you could have thought 4, 5, but then this can't be the correction because it comes down in 5 and it's clearly a 5. So you're stuck with the idea, okay, well, we must be expanding here into a B. So while it's an unusual shape, right, it's that same idea, right? It's a 3. Now, what in traditional, right, normally you'd look at it this way, but because we're expanding the B wave here, we get it in a different shape. And again, it's working backwards. If this is the 5, that can't be the correction. I suppose it could have been the start. It could have been the start of this if we're going to get a zigzag, but as we pop higher, now note what we just did, right? So I cannot make this shit up, guys. So we're here, we're in between, right? So this is not tick perfect, but we go golden zone, right? So if there's we should be, anyone who's watched me for any period of time, certainly members, I've drilled this into you, right? So you're always looking for it, which is why these guys always have it here. If there's any confusion or doubt in your mind about whether this algorithm is running across all asset classes, the example after example after example ought to alleviate any of that questioning in your mind as to whether or not this is a zone to, at the very least, let's pay attention to it. All right. And then from there, what does it give us? It gives us another golden corner. Now, this one's kind of tight. It's kind of tight. So I can understand why he hasn't drawn it. And I did this yesterday to show you. It's a little tough to get these in here when they're that skinny. So we've already hit the 80% here. It's always a little better when they go wider, right? So then we get a higher target. But this, we've already burned. So there's the golden corner. Just like this one was hit immediately. We've already burned that 80%, right? So same thing always, right? As long as this pivot holds 80%, we get there. There it is. I can't make this stuff up. So here he's got an upper target here because what's he doing? And I'll just do this so you guys see this. God, I never get that on the first click. Okay. 1, 2, right? So you can see here why his target is there, because that's our high probability zone for the third, right? So he's just bringing it over here, showing it. I may not be tick perfect right there, but that's essentially the idea. If it's 1, 2, well, we're looking for an impulse for the 3. Well, we've got a great start to the 1, 2. We've already note here, we hit the median line as we hit the 100. So looks like we're a tick beyond that. So we're far enough to where you'd say, okay, likely we're seeking the third up here. Now, if this is going to keep ripping, market's not taking off today, but if this is going to keep ripping, well, you can look inside of it. Again, this is the context that Elliott Wave gives you. Well, I've got a 1, 2. Now I know if this pattern is going to continue, I'm looking for an impulse here. So no matter where we pivot, you're going to be looking to break this down into an impulse, right? Something like this is what is required to maintain this technical roadmap here. If this is the 1, 2, we have to have 5 here. Well, pretty good start to the 1, 2 there. You see how it gives you targets as opposed to, okay, well, if you're just drawing lines, right? You say, okay, we broke that. Breakout? What kind of target am I going to use? Where's the context? How can I have a reasonable target here? I'm at all-time highs. Yeah, I'm at all-time highs. So how else am I going to define a reasonable target based on a pattern that we know repeats? I mean, there's not a day that I haven't shown either this or this across pretty much everything we look at. Again, we can't make this stuff up. I just show it to you so many times that eventually what my hope is that you look at that and you say, I got to start factoring this into some of my trading decisions and start using these as reasonable targets. Now, there's nothing that says that can't go higher, but you got to have a target. And the fact that we can frame it with geometry is just making it all the easier, as opposed to, well, shit, I don't know, man. So if it breaks that, if you get the breakout here. Now, what's your target? What geometry are you using? And what's particularly good here is that he's not buying the breakout, right? So you guys hear me say that all the time, even though, yes, here's an example, what it went through. But where was the entries? Down here. See, you already want, when you're hitting something like this, where you're hitting either a breakout, a structurally important pivot like this happens to be the all-time high, you already want to be long going into it. You don't want to long it there. Even as I've said this before, there will be times where this will just go and you're going to be left holding your mouse. That's going to happen. But over time, the idea of taking the breakout is not going to serve you well. You want to wait. Now, so if you didn't get this, you say, hey, there's one, made money. Well, okay, if this is going to be 1, 2, 3, at some point, there's likely to be a correction. And now you're looking at this saying, well, if it was going to correct, where might I anticipate some support? Previous resistance, right? That's not just an old fable from TA of yesteryear, right? It happens for a reason, right? Well, if nothing else, you could say the breakout traders, right? As there are always going to be breakout traders, no matter what I say, right? If we get this, the breakout traders, if it comes back down here, they're going to defend those longs. That's why previous resistance becomes support, because the longs here are going to defend. If they can't, doesn't mean it can't break, but you can understand conceptually why it would potentially be the support. Why? Why was it the resistance here? Right? I mean, so resistance. Oh, you could probably fatten that up to call that part of that resistance. Remember, it's a zone, not a tick level. Now we're through. Okay, so if this is, let's just do the fib swings, right? So if this is 1, 2, right here, that's a reasonable target for my 3. So I would do it this way. I would say, okay, well, there's a pretty good target for the 3. So I'd set an alert right there. If it gets there, I want to know. Okay, 1, 2, 3. Well, I'm here. I'm on a 1 hour. You have to start going down in time frames. I don't know that you even need to here. 1, 2, 1, 2. Got our 80%. If it's going to go a little bit further, all that does, right? So if it keeps going, really all it does is solidify in your mind. Okay, I'm pretty sure I know where I am. Now, could go higher. Might start the correct. So if let's just assume we do what's typical in this pattern. If this goes 1, 2, and we pivot here, just for the sake of the discussion, let's say we pivot here, right at the 1618. All right, now let me get my basic on here. Okay, if we were to retrace from there and come back and we did a 50% retracement, right, you see it obviously, right? Where's the 50, right at the prior resistance zone, now potentially the support zone. If it were to do that, now that's deeper than you'd like, right? In truth, right? If this goes up here, you'd rather have something like this, 23 to the 38. But if it comes lower, I'm not freaking out. If anything, that's an opportunity. Now, I don't like to see a 4 go to the golden zone. Right here, we'd invalidate. Well, pardon me. We would not invalidate, but we would start to have the impulse breaking down, because this would be the pivot of this 1. But we don't want to come down to that, because it reduces a couple of things. One, it reduces the upside targets down here because we're going that deep. I mean, this might still hold, right? You could still get that out of it, but you'd prefer that in the 4, you're holding up here between the 23 and the 38. That's ideal if you get it. Now, you go a little higher. Again, this would be a perfect example of trading principle number 3. If we're not going to pivot right at the median line, we might hover around it before the market decides which way it's going to go, right? Nothing says we stop here. You just know you've got an algo at your back here. We could easily go up to the upper here, and we finished the 3rd up here, right? Now we're at the 2618 at the internal, but we're at the 1618 at the larger degree. So hopefully that makes sense. So if I were just to label this up inside it, 1, 2, we're looking for a 3, 4, 5, which would give us that. It's got to go up a degree. Let's go minuet. Let's put it in yellow here. So 1, 2, we're looking for that to complete up here. 3, 4. Then, right, you just, it's context. Okay, I'm in uncharted waters. So how else would I start nailing targets? Well, there's some, oh, geez, I'm sure there's somebody could post up something. Well, you can measure the length of X, put this, project up. But this just seems a smarter way to do it to me. And I've looked at other ways you might do it with traditional price action. But up here, I know this is a high probability location. That's all you get, probabilities. Good looking trade here, Mr. Jack. I really like this here. And it's just a good example. But no. Right, the algo target becoming the support here is interesting. 1, 2, 1, 2. Nice work coming off of that 4. But the point I was really trying to make is that this is what drove the analysis, because that 5 made you have to work backwards, saying, okay, that I'm looking for 3. That's the only way I can get there. A, expand the B, down for the C. Up we go. Good looking work. Okay, let me keep moving. All right, so I got Pizza Man. Oh, what do we got? VW. Oh, I haven't looked at that in a long time. Let's get this up here. Okay. He's got this on the left. That's unusual. Okay, so let's. Interesting. Well, that's our COVID low. Okay, because this. Oh, come here. Let me get this going here. All right, I always put these down, right, because I go there last. Let's let his analysis come up. Okay, VW. Oh, this is some good looking work. Pizza Man. All right, showing really, really solid improvement since you got here. So that one, you're kind of stuck with the same thing here. What do you do with this? So we got a double bottom down here. All right, market loves a double bottom, right? So look what we get here. Look at these. All right, so double tops and double bottoms, right? So really that's wick high. Double top, you'd call that a double top. Really this as well. So there's a good example, right? It's a resistance. God, never the first click. It's a resistance zone, not a resistance price. This zone has been the resistance. Now, so here's right. So here's the classic. Oh, am I going to buy the breakout, or am I going to wait for the retest? Right. Better way to do it over time. Trust me on this. I've done it. I've done it the other way. I wouldn't tell you this if I hadn't lived it. This is a bet. Wait, get through. Now let's retest. Is it safe? Is it safe? 3, right? So 1, you can think of it this way, right? We get a sideways 2, right? This is corrective. We're not progressing the trend until we come and break out of this. This has probably got a Wyckoff accumulation here. Now we get the big rip. Now, where do we go? Again, I can't have scripted this amongst these people. Where do we go? 1618, 175. On the assumption, right? So the first thing is, okay, that looks like the 1. We're going sideways here, but this is corrective. Now I'm looking for the 3. I know I need a target. What's the most probable location for it? Where do we pivot? Now add the geometry, right? You see he's got a channel on this. We're hitting that upper line here. You could put the traditional as well. But this being sideways, now you're looking, right? So it's just guideline of alternation. So we go sideways into the 2. So I'm looking for something sharper and deeper in the 4 per the guidelines of alternation. Well, I'll be damned, right? So what do we get here? Oh, shit, you're probably going to have to do that as an A, B, C to give you the W. Up for the X. Again, there are times where that's all you got to work with. It's not a perfect, but you can see it's in there, right? It's not just a straight line. There's a pivot, a retrace, and then there's a kicker, right? So there it is. It's skinny, but we can give that the X label. Now coming down here, I got to go A, looks like triangle B to finish the C to give us the Y. So even though there's a lot of complexity here, and this is just one of those things you got to remember. And if you can't remember it, don't forget about our Elliott Wave cheat sheets. Oh yeah, I can have a triangle in the B. So I can go A, B, C, D, E, come down and finish the Y. So I got a 4. Add on the retrace. So do you see what he's doing here? He's saying, okay, so I got a reaction here that was technical, right? Look, again, do you see the consistency of not only what I'm telling you, but now what is being taught here? So look at all this. What do we get? We get a resistance zone, right? It's not the tick. Now he's framed it here like so just to make it all the more sexy. So you got this nice support zone, prior resistance, right? It wobbles here. Look at the breakout. Right. So up we go. Now let's test it. Is it safe? Or is a bunch of selling volume going to come in here? Whew, up we go. Right. So anyone who was thinking, breakout here, I'm going to fade that. Boy, did they get bent over hard. Boy, that came out of there because anyone who was thinking of selling here, do they have to cover quickly? Right. Gives it the fuel to get up here right in the pocket. Okay. So 3, we come down. Oh shit. I can't see what he's got there, where we are there. So this would be never the first click. Okay. Here's the 50. All right. So we're coming up and it looks like we get a little front run on it and very well could be that support zone here. We get the low volume node in the volume profile, right? If it's going to pivot, it'll be right on the edge of that, which is exactly what it does. Otherwise it'll fall to the next high volume node. So we get a little kick there. Now that's the daily. All right. As he's noting, okay, could be the 1. So if you're just looking at this as I am for the first time, I haven't looked at BW in a long time. If you're waiting for the retrace, okay, well, again, context, where am I? Okay, well, looks like we're on the start of something that might set this up beautifully. I zoomed in there. Well, again, it's not oversold. It's the energy potential is there for this to go all the way back up. Now, note here, which is very common. That's why the 50 is so important. If it can't get over the 50, that we don't have a new trend. It's just continuing on with the old trend. So tries, fails. Now, are we coming back down again? Because eventually one of these is going to have the energy to go all the way up. That's what you're looking for. But many will tell you the way to trade the RSI is right here. Right there. That's where you're in trend. You've got trend strength. Now, with this rolling over here, that's what you'd like to see now as it comes down here. That'll do it. What you want to see here is a little divergence. So if we were to come down here and hold here, we're looking for that to come down and then perhaps pop back up, down, and then go back up over the 50. Now you're because we're looking to get into the third, right? At this degree. Now that could be the third of the 1, as he's noting here, per the higher degree. So this is just an intelligent place to be looking to enter. Look at the risk, right? You want to try and enter as close to that location where you're wrong. Hang on. I got to look up who said that because it was just well said, right? It's so if I can get that there. So there's two things to think here. If I buy it at the golden zone, do I want to give it that kind of room? Like, how much do you like it here? Or do I want to just take if I'm buying it here, take that might be too tight, right? Now, this is a daily. So the compromise, if you don't want to use the 786 or the pivot low, if I get that right there, the compromise is the 707, square root of the 50, which is often you'll see that pinged if it's going to break the golden zone. Great looking setup. Right. Now, I'm not even touching on some of the geometry that he's got in here additionally. Right. So from here, note here's the pivot. Here's the pivot. Now here's the median line. Now failure to make, note what happens here. We have a failure to make we do not. Let's see. Here, if I make that fatter, there we go. So I can see it a little bit better. Okay. This one now has made the median line, but there's two of them here. I got to make this one bigger. Let me make this one 3 so I can see. Oh, I see what he's doing. Okay. So we've got, sometimes a little hard when it's not your work to decipher it. So here from this corner, we get a corner, not golden, but we get a corner pocket, right? So as long as this pivot holds 80%, we get there. Ping, right? And essentially in a straight line, reaction. Now we come back down. Now we've got, I see what he's doing. Okay, so now we're here. We're not golden. We're not quite to the front run. We're not quite to the 50. So likely a front run. We're working off of that support structure here in the low volume node. So now as we sit here, he's working. God, I'm going to hide this one. It's hard to see it. Let's get this one hidden. Come here, hide that. Okay, so now we get this one here, and we get the corner here. With this is our target. All right, so here. I know it's hard when it's always easier when you drew it all. All right, there's his target. So we've got a corner pocket so you could look at it this way, right? So how would you define the risk here? As long as this pivot holds, I've got 80% odds of getting there. I've got an Elliott pattern here that supports it, right? This looks corrective, and we're good with guidelines of alternation. So this is sharper, deeper, and I get a corner here. So as long as that holds. So when you're back to where's the trade, well, now you'd zoom in here and say, well, I know as long as this holds here, I got 80% odds of going higher. So if you're not going to use this or the 707, you could use this, because then you absolutely know that this trade is wrong. Or at least, right, this is going to have to get pulled down, right? So, oh shit, you may have this locked. No, he doesn't. So this could easily come down here, could go to the golden zone. But right now I've got a pivot and I've got a reaction. So if this comes down, I could do that very same thing, right? Just sit here. Okay. I'm looking for a 2. Where's my high probability zone for a 2, right? That's all we're doing is playing probabilities right there. So if it comes down a little bit deeper here, I'd go down to some lower time frame. See, do I really have a 3? Well, there's my 2. So now I'd have an inside. So within the larger one, I'd have another one, right? There's your first target, third target, right? We're looking for the 618. Do you see how it just over and over? It's the same thing applied over and over and over again, right? That's the power of it. That's your superpower. As soon as you go, that stuff's not working. I took a loser in that one. I don't know about this stuff. Let me go look for something else, right? Then you're down the rabbit hole of despair. I've been there. I've been that guy. Right. After 30 years of doing this, there is very little that I haven't looked at. And I mean, or traded, and everything this gives you the best combination of pattern recognition, of integrating what the algos are doing, of looking at support and resistance, of working with pattern recognition. I mean, and then add the geometry and you're bloated for bear. Now, the only thing missing is your money management and risk discipline. If you fuck it up with this, it was all self-inflicted, because here's how you trade the market technically. If you're taking big losers, you're doing that to yourself. It's as simple as that. People respond to this because I say this in this way. There's two ways to look. So you might say, okay, well, if I like to use the boxing analogy. Well, if I get in the ring, I'm going to get hit. Right? That's the first assumption, right? So you have to accept the stop. What you can't do is just put your arms down and lead with your chin, say, go ahead and hit me in the face. Because if you're not putting a stop on it, or if you're taking wild risk here because you want it now and you want it fast, because I saw someone on Twitter is a millionaire off of this one trade he make. you are just setting yourself, you're going to blow your account out. If not now, eventually you'll blow it out because you're not managing, you're not respecting how quickly the market can pick your pockets. And it will do it if you let it. So how do you trade and not let it blow you up? This is all the fun part. Solve the puzzle. Can I solve the puzzle? I solved the puzzle. Okay, now can I manage the risk? That's what separates the successful from the unsuccessful, the 90% that don't put the work in because for whatever reason, either they don't know or they're just too damn lazy. Oh, Jesus, look at all this stuff I got to memorize with Elliott Wave. God, man, screw that. I'm just going to draw some support and resistance lines. Again, I don't want to belittle price action or identifying support and resistance. That's not what I'm saying. But this is putting a full contextual methodology around. This is all the market ever does, right? That's all it does. One way or the other. That's all it ever does. Now we're adding all of this on top of that, but identifying that that's the only thing the market does. At some degree, that's all it does. We can complicate the hell out of it, but really, okay, I got to swing. Now it's either going to break that pivot or it's going to break that pivot, or we're going to go sideways for a long time. But one of these two is going to break, and that's the market telling me a story. Oh, you're going to break down here? Okay, something has changed with this analysis, has to be redone. If we start trending higher here and I get here and I can't get any further legs and I start to head down, again, the market is talking to me. Oh, hey, that was a 3. So this analysis cannot be correct. So you have a point where you say that can't be right. It cannot be if you're applying this methodology. So it tells me that if I break this pivot, I don't want to be in this trade anymore. And my analysis has to be reconsidered. Maybe the 4 is lower here. We're going to get a double zigzag. But I know that this is wrong. Otherwise, how do you know when you're wrong? Oh, I got stopped out, so I was wrong. But is it still something you would consider buying? Or are you now looking to sell because you got stopped out? What's the context? What came before it so that I can identify what's likely to follow it? And if it doesn't do it, then something has changed. My analysis, because that's all we get. It's always just a snapshot in time. Right now, that's a high probability of being a 1-2 with a target of a 3. But that doesn't mean that's inevitable. It just means that right now, that's the snapshot I have to work with. Here's my odds play. Look at the combination. I got pattern recognition. I got geometry on top of geometry. I'm coming out of a support zone. I'm looking for the retrace because we don't want to buy it when it's going up. We want to buy it when it's coming down. We get a technical pivot and we get a reaction, just like we got here, reaction. Right. So if you're not sitting here with a limit order, what do I say over and over and over again? Wait for the reaction. Okay, so why does it sell off here? Because the people here that bought this, maybe they bought it in size, maybe they're just new traders, and oh shit, I got a profit. Oh man, I got to take that. That's incredibly common. It's more common than you realize. Oh man, look, see, I got from 192 to 199. Oh, I'm going to bank that. And then it does this, and they go, "Whoo, man! I'm glad I took that profit." Right? But if they're not putting it in contextually as to where you are, that's what comes out of it. And they go, "Oh, all right. Well, I made a little money here, but look at everything I left on the table." Now, if it's up here, do I still want to be a buyer? Well, is the pattern is the market talking to me? Is it consistent with what I thought was going to happen here? Oh, well, if I didn't get it to the 3, well, now I know I can sit here and anticipate the 4. If it does this, okay, that analysis is all wrong. And this is just a bigger ABC. But right now, if it comes here, that's the best thing I got to work with. Okay, I'm in the geometry. I'm following the pattern. I'm at a high volume node. I'm right where I'm anticipating it. That doesn't mean that it's inevitable that it goes here. But that's all you get, guys. Probabilities. That's it. That's all you get. Right. So if that does that, we go here. Okay. Now, again, the market is talking to me. I've just completed an impulse. What am I anticipating after that? 3 legs down, 5s followed by 3s, right? That's you want to break Elliott Wave down. That's as simple as it can get. 5s and 3s. That was the genius stroke from Ralph Nelson Elliott. 5s and 3s. And if you're unclear, like, whoa, shit, what the hell? We got that's what the Elliott Wave cheat sheet's for. We go, God, could that be a triangle way? Hey, can I have a triangle in the B? Well, now you're pulling up your Elliott Wave cheat sheet and you're going, wow, in that correction, if that's a WXY, yeah, I could have the triangle in the B and I know where I am. Nice work as usual. Pizza Man, very good. Pizza Man giving us 2. Here, let me go again. Okay, so I think I made that point there. All right, let's keep moving here. Good setup in Volkswagen. Bison, no idea what they do. Bison. Again, I love to see this, right? Journeyman technician. Let me copy this because I'm going to have to dig in there. For some reason he's putting these around the left. I'm not sure. Okay, so let me always, right? So I want to see the pattern first before I go to the indicators. Always go there last. Nice work here, right? Every pivot is accounted for. Everything. 1, 2, 3, 4. 1, 2, 3, 4. Look, nice little triangle in the 4. That's where when you spot a triangle, that's your first thought. It's either a 4 or a B. Up we go for the 5. Waterfall down for the A. B. Looks like we got 2618. Let's just take a pop there because maybe that's the 1618. Oh, that must be internal. Where's he getting that from? What is he doing? I see. Okay, so he's going from the top. Okay, so let me put that back. Okay, so A, B, C. Allergies are killing me today. All right, so here it is. Now, look, this is really a lot, or is it? All right, all the market ever does. Right, that's it, right? Anything in here, all of this detail is just this being extrapolated out. A, B, C. 5 followed by 3. Oh, say, hey, wait a minute. So that looks like that'd be, hey, if that's 1 and I got 3 down for the 2, what happens here? Well, if you were trading this off of the idea that this was 1, 2, 3, we overlap here. Okay, maybe it's a diag. With this that follows here, so you could easily have taken that down, somewhere down here thinking, I'm going up because I've got my ABC. I've got my 5 followed by 3. Well, wait, again, just as I was saying, if this happens, then you got to reconsider. What else could it be? Because I've taken out this low, so the correction can't be finished here. So process of elimination. If it's not ABC and it's got more to come, well, then we put the W on it, right? What follows that? 3 into the X. What follows that? A, B, C. I got context. Now look where we are down here. So let's go zoom in there. All right, so we get our corner here. You see he's doing the exact same thing. Exact same as last. All right, so I've got a candidate here because I've come down and I've finished this with a 5. There's a clear 5 leading us down. So it's either starting or finishing something. Well, this is a pretty complex correction, even though at the end of the day, it's just two threes being connected. But that AB, here's the conviction. Okay, I finished in 5. But thus, right, so I've got a candidate here for the Y, right? At this moment in time, it's nothing more than a candidate. Well, because that's so extreme, I don't know that I'd sit here and try and buy the turn, but I sure as hell like this idea, right, as you see that he's doing. This is almost exactly like his last one. Right? Can I get the 5 here? If I get the 5, so I have a target, right? Clearly he has a target. Here's his algo target. Here, well, that's the larger algo target. Here's the micro, right? From this one, if I get this 3, 4, 5, right? I've got my target. Now, if you miss that one, right now we're just waiting for this, right? Maybe it comes into this structure here. Now we're off. We're off again. Now, if I get that and it's technical, what am I doing? Again, same thing over and over and over again. If you do that, you'll develop a feel for this and you'll have a methodology that has proven to be profitable over time. If you're losing money, you can certainly take a string of losers with Elliott Wave, right? I don't want to suggest otherwise here. That's just part of trading. But if you're not able to apply this consistently, something's wrong, right? Something's wrong with the money management, right? The first assumption always you're going to be wrong more than you're right. That's just the reality of trading. You have to be at peace with that. You cannot let your ego get so involved that you go, God damn it! I know that thing's going up. I know it's going up. I know it's going up. Right? That's what kills new traders. I'm positive. I read the earnings report. I know it's going to go up. The Fed is supportive. There's no way it can go down. As soon as you hear yourself thinking that, there's no way it can go down. I can fucking guarantee you it's going to go down because the market has an unbelievable capacity to punish mistakes. And if you are not trading with a stop or you don't have disciplined money management, the market is going to make you learn that lesson. Yes, well, all we're trying to do at TradeDevils really is take 30 years of experience and all the real-time experience, now bringing all of that experience in the traditional markets and applying it to cryptocurrency is shorten that learning curve. So you can learn it from someone like me, or you can learn it the hard way. I'm trying to shorten that path. It's up to you what you do with this. I can just show it to you day after day, chart after chart. Sooner or later, I hope one of these you're going to go, you know what, I'm going to give that a try. And if you get stopped out, it can't be, oh, shit, I got one loser. Well, this crap doesn't work. You'd be shocked how many people will draw that conclusion. Wow, 3 losers in a row. That's enough of this. Well, if this is what you're losing, welcome to trading. You should anticipate that those are the jabs. That's the jab, right? You get in the ring, you're going to get hit. Right? Let that happen. You did that to yourself. You dropped your gloves, put your chin out and said, go ahead, knock my teeth out. If you let that happen, look at the risk control here. Look at the risk reward ratio that he's working with. It's not that complicated. The puzzle solving, right? There's complexity here. You either love this or you hate it. Right? If you hate it, there's other ways to approach the market. As I've often said, if I had nothing, right? If I could do just one thing, one thing, I'd median lines without hesitation. If I could have 2 things, I sure as hell would want to have the fibs on there, right? And get this, right? And get that geometry. I got an algo. I got a target. I got I got 80% odds. So you could take the Elliott Wave off, right? I got a swing. I don't really, if you want to try and deny the 5s and you're just like, well, it's a swing, it's a retry, whatever, right? Well, it's something, right? If you want to deny it, okay, this is getting, if you watched my content for any length of time, it's getting really hard to deny this, right? I mean, I don't know how anyone could watch my content and not go, God, I got to pay attention to that. Right. So we're trying to, listen, this is not my discovery, right? This is me just looking at all of these different approaches to the market, right? And now having my own success with this, saying, okay, I can pass this along. I can pay it forward. You really want to dig in? Yeah, you can become a member. And yes, there's an investment in that because we really take it seriously in teaching you so that you can get to this level. So look at the quality of the work these guys are posting. I had a guy yesterday say, I'm kind of nervous about posting. It was one of the best technical analysis charts I saw all day yesterday. And he's nervous to post. Listen, guys, we're here to help you, right? That's the only way we succeed is if you're successful, right? So I do these over and over again. So you say, God damn, man, I've seen that 100 times. I think this time I might start to include that in some of my analysis. Resistance zone, right? What a nice target, right? If you're looking at this going, well, where might that go? Well, boy, that sure makes sense. I got a high volume node here, but if I get to this, see, now let's say I get here. If I get here, okay, if that happens, is that likely to be my 3? Probably not, right? Probably not. That's not a good 3. Where's a good 3? Good 3 is going to be up here, right? So I got to get through that pivot to confirm I got a good 3 up here. There's my 1618. If I get here and I get a reaction because the algo is going to take profit there, what is that likely doing, right? Now, if this comes down in a 2, or pardon me, in a 3 like this, I'm most likely getting the 2 of the 3rd. Most likely. Not inevitably, most likely. So he's trying to play here from the 1, 2 to complete that impulse. Here's the reload. So I'd leave the chart just like that. If I can get this one, beautiful, right? I know right where I am. I come right into structure. Okay, now I'm looking for 3. If I get 3, great. I don't have to wonder what to do here. I can enter right there. I can put the stuff. Look at the risk reward. So good. Don't let that's, if you get anything from me, don't let that happen to you because you're doing it to yourself, right? That's just suicide. That's the trader's suicide. That's good work, Pizza Man. Back to back. Excellent work. Okay, I got Marco D. What do we got? WKHS. Okay, let me keep going here. WKHS, Workhorse Group. Oh, this looks good. Let me make a copy here so I can get in there. Marco D, I haven't posted in a while. Glad to see you back. All right. 1, 2, 3. Look, all right. So this is what we're teaching. Now look how these guys are executing. Okay, 1, 2, 3, 4. So he's giving you an alternate because this could be 1, 2, 3, 4, 5. Could be that we completed here. So he's putting 2. Now I wouldn't do it this way. I think I've said this before. I would have this on 2 separate charts, but since we're only working with 1, he's giving me his other thought process here because this could be 1, 2. All right, so I can extrapolate from this what he's thinking. Now, of course, we would want to pay attention to these pivots. No. Well, it looks like that's an expanded B. So we have to go right here. There's your 1, 1, 2. Could be 3, 4, 5. Could be, thus the 1. And there are times in Elliott where you're going to be unsure what could be that, right? But I need a little more information. I need the market to reveal a little bit more of what its intentions are here. Okay, could be 1, 2, 3, 4, 5. Could be we're done, right? So that could be a completed impulse. But now I look inside here, right? It's not when as I often will tell you, when Elliott is most effective is when you literally can't fucking miss it. Come on. How are you missing that? We're in log scale. When I do that, it fucks it up in log, right? But there's the clear 5. Okay, so I know. I don't have to wonder. Here, I've got an impulse, so I can quantify this. What is it? So I've got a completed impulse. So it's either the 3 or the 5. It's not really affecting my next decision as to whether it's the 3 or the 5. So the market can tell me a little bit here if I'm going deeper. Now I'm starting to think, well, hey, maybe it's a 2, right? The deeper it goes, the more probable that it's a 2 rather than a 3. So we don't want the 4 coming down this low, ideally, right? You might as well strive for the pattern that's most probable to complete. So if this is 1, 2, if it's 1, 2, 3, 4, 5, and we complete, well, now I'm looking for a deeper retracement, as he's noted down here, right? I'm looking for this. Right? God, these guys use different colors, but I'm assuming that, this is his 50 in his golden zone. Here's his 7, 8. It's going to be a 7, 8, 6. So we've had 5. What are we looking for? Right? It's all the market ever does. Right? Same thing. I say it over and over again. It's all it ever does. A, B. Well, that looks technical. All right. So you get right. Always an algo on the other side. Right? Never forget that. Right. So we come to the 50. That algo has a target down here. All right. So what stops that? Well, we've already broken this, so I can look at it and tell you that's past the golden zone. So what keeps it from going here? And if we go here, how does that change the story? Well, I would have overlapped here. So that immediately would make me think I'm putting in a 2. So I would hide this count if this is what's happening in real time. Now I'm staying with this, thinking I'm going down to the C of the 2. Somewhere down here, this is the zone I'm looking for it. Now I'm going to make these a little brighter so I can see them. Okay. So what do we have here? Oh, it looks like a 50. I mean, how many times do I have to show that before you start guys going, fuck, man, I got to start paying attention. I can't make this stuff up. Look where we hit the median line. The market does not matter. The time frame does not matter. It's the same thing over and over and over again. You can either fight that and say, well, fuck that. I don't buy any of this Elliott Wave bullshit. That's my dad's TA. You can either fight it or you can embrace it, because I can only show it to you so many times before I got to assume if you're smart enough to be trading, you got to start looking at this going, God damn, there's something to that. Now, so you're looking down here, it's going, oh, well, hey, look what just happened here. Now, could that happen here? Oh, it only happens when it's going up. Really? It's hard to understand why people fight this. Right? I lay it out for you every day. People are funny. People are funny about money. A, B, looking for a C. Nice work. Nice work, Marco. WK Workhorse Group. I wish I knew what they did, but it doesn't matter, right? I don't even need to know what they do. It doesn't matter to me. Now I want to pay attention. Earnings just came, right? We didn't get much of a reaction off of it. Pretty good reaction off of this one, right? Gave us that pop, but all it's doing is setting up the 3. So do you see how it's a process? It's deductive reasoning. If I come down lower here and I break this pivot, that's not likely to be the one. So now I'm looking for a deeper retracement. It's that context that matters. Now here, that's a little skinny for the median lines. Channel's just as powerful. Oh, he's really skinny on that. But because it's a correction, I would start with the shift. Now, I got to make that fatter so I can see it. Oh man, your lines are, oh, here, let me see if I do it. I can put it in mine. Default. There we go. Now I can see it a little better. Okay. So here, this is too steep, right? So we're already outside. So I want to put that in the shift. Whenever you're looking at a correction, I want to use the shift. All right. So we're going to pivot here or we're going to go here. That would be, and then what do we add to that, right? So how much confluence can we build here? I want to look for some sort of technical relationship between the A, the B, and the C. Well, if I'm coming down this low, well, now look where I am. I'm right between the 50 and the golden zone, right where I'm anticipating an algo to participate, right in that location that's the highest probability for a wave 2. If I get here, it's going to have to get through that algo target and pump that lower parallel. Oh, what a sweet trade. Now, if it gets there, if we come down here, right, looks like we've got an impulse underway, but this could stall it. We'll see, right? You would anticipate that if it's going to complete, you wouldn't truncate here. Otherwise, you'd have a flat. Doesn't look like a flat. So it looks like likely we're going to come down a little bit lower. There's the 618. This could do it. This could do it. This could do it. If I get here, now I'm not sitting here with a limit order. I'm waiting for the reaction. Look, I'm going to have to get through that median line. That might do it right there. So then I get that little pullback. There's the trade right there. I'm looking to get into that third. That's the money wave. I mean, if of all the waves you could get into, right, it's the C or the 3. In fact, what is it, Monty? I think it's purple belt. No, I think it's purple belt. Where our requirement is to part of the passing process is you have to show us 50 trades where you're trading only the C and only the 3. Why do we do that? Because we want you to recognize that that's your money wave, right? So if you just go about looking through the market saying, okay, where can I find a C? Where can I find a 3? Or in the process of that setting up. That's why we do that, right? We want you to focus on that because that's where you're likely to have the best risk reward scenario. Buy as close to that point where you know you're wrong. So if it does that, oh, we're wrong, right? So if I take that, okay, that's a jab. That's not a knockout blow. It's just a jab. All right, I'm going to get hit. I got in the ring. I'm expecting to get hit. If I can take what creates the 3? And I talk about this all the time, right? So bears are going to try and get the stops that are there. They're going to, because those are fuel to take it lower. If they can't get it, they have to cover. And the people that are looking here going, oh, 1, 2, that looks like a 3. They're long. The shorts are covering. Get that? Good work, Marco. Oh, Trade Diva down under. Love her. And of course, she's giving us the Aussie. She's an Aussie. All right, so let me get over to her. Oh, would you give me, Trade Diva? Give me 2 links. Oh, no, here. Okay, let me do that. Oh, let's see. You gave me your Bitcoin. So let me.
We'll just type in.
I gotta copy it. So she gave me the wrong link. Hang on 1 second here. We'll get this sorted out, guys. If not, I'll bring it up because I've got her image. I just don't have her account. All right. So
now type in
AUD.
Yeah, and then she's using Owanda.
Forex. Yeah, we like Owanda, so at least you can get tick volume. Okay, and she give me a 5-minute? What's her? Let me see that. What's her time?
Because she was on Bitcoin 5 minutes.
Oh, she gave me. I got it. So she gave me a 4-hour. Okay, so let me get some context here so I can see this. Now, Trade Diva down under. I wish we had more women than we do. I think women are better traders than men because they have less ego involved. This is good work here. I got to pull out a little bit further to get, because this has been a bear of account. Now, this is she is so improved from when she first got to us, and she gets better and better and better with everything she posts here. So look at the nice detail work here. Every swing accounted for. Nice WXY here. You can see why. You see why you can work backwards from this, because this is a 3. So you got to work back. Remember, all we're looking for is 3s. You see it? I can just tell you over and over again, and then eventually it's just a matter of showing you. But you see in between it, we get a 3. So we get a 3 that follows with another 3 that finishes with another 3, right? So we can quantify that and say, well, I know what that is. That's a corrective WXY. Okay, so good. That works perfectly, right? 3, 3, 3. We finish, right? So I've got a big fat 1 up here. I'm going to even make that bigger. All right, so big 1. All right, so we know what we're anticipating to come off of that. We complete an impulse. Now foot's on my mouse. There's complexity here. We're not in log, right? So what are we doing here? Just another 3, right? Same thing over and over again. I don't want to insult your intelligence. I've got to show it so many times so that your eye, that's all you're looking for. Where are they? Where are they? Where are they? What comes next? Okay, let's zoom in there a little bit. Oh shit, here. No, we're not. Oh shit, hang on. Come here. Jesus, how did I do that? Oh, I know why. Because she's got, this is her. All right, let me, maybe that's easier. No, it's the volume. Okay, I can zoom here. So this is, if this is the one, so interesting, right? So do you see what she's doing? She's going 1, 2, 3, kind of skinny here to give us she's giving me 2 counts here. She's giving me an A wave. So she's bearish here. Now, let me get in there. I got to zoom in a little bit. Let me go to her 4-hour here. Okay, FX. If I can give any FX traders out there advice, this comes from a lot of experience. 4 hours and above only. You go down below that, it's not a matter of when you'll blow up. You got to stay longer term, particularly with Elliott. 1, you'll see it so much more clearly. And 2, the highest risk, as my members all know here, the highest risk in FX is always when you're entering the market, right? Because if you don't get a move away from your entry relatively quickly, market makers are going to try and get you out. Okay, well, note here. So if this is, so she's giving you the possibility that we've got a WXY here. So in blue, let me, here, let me make that a little brighter. Let me change that color. Okay, so this is potentially now a WXY. Do you see how she's layered on 2 potential scenarios here? So 1 big 3. Now look right here. Failure to make the median line, right? So we know from trading principle number 4 that a failure to make the median line creates the potential for a move equal to or greater than the move that failed to get there. So the fact that we don't get here is potentially telling here. Now, of course, we could go up here, roll over here, and we'll catch it down here. But, right, so we have, how do I know? Why can I say that? Because I know I have 80% probability of getting there from this corner. It doesn't make it, right? So the market's talking to you. So potentially now, if this is per her red count, I'm going to put that in white so we can see it. All right. If this is 5 into an A, right? So we can just process of elimination. Well, we completed an impulse up here. So if this is 3 to complete that, okay, that could be we do it through the WXY. There's some complexity to it, but it plays. Or it could be the A, right? And that would be extremely bearish because all we're doing is putting in the B now. So we've got 5 down into an A. We're working on the B. Now I got to zoom in there a little bit more to see her work. Oh, I want that volume off of there. I'm just going to hide it. Okay. Let's get out of there. Okay. We don't make the median line, but look what comes off of that. I got a ripping impulse, right? That's a pretty good move, right? 3 down. We're shallow for a 2. It's not where you'd look for the 2. But it's not like we don't see it. It's just that you wouldn't have been sitting there anticipating, oh, there's the 2. I'm off into the 3. You wouldn't have known that, right? So it's, of course, always easy in hindsight, right? You wouldn't know, oh, I'm at the 23, probably a 2. So this is likely not a trade she was in. But now as we move away from that, we can start to construct the potential roadmap here? Well, it's 5 up. So if this is going to be my pivot low off of the failure to make the median line, now I'm expecting a move that's pretty solid because I've got a target up here, way the hell up here to get that corner, way to where we failed to get it from. So if this is going to pivot here, I've got something to work with. I know I now have a target. So if it's 1, 2, and we're in this, it looks like it's another 1, 2, potentially now another 1, 2. We'd have to go down to the hourly here to really nail it down. Now, so I tell you, trading decisions 4 hours and above, if you're going below that, is you're trying to qualify a count. That's why you would do it. I wouldn't come down here and say, oh, now I'm making my trading decisions off of the 60-minute, because before you know it, now you're down to the 15-minute to qualify. And then you say, oh, I'll make my trading decisions off the 15-minute. And now you're a long way from the 4 hour. 1, 2, 3, 4, and look, nice finishing detail. So she gets a completed impulse here. We can plant the 1 on that, say, okay, until proven otherwise, that's a reasonable deduction here. I've got 5 leading up. Now I get a funky little, right? So because it's 3 and it rolls over, it takes out that pivot process of elimination. Because it's a 3, we expand the B wave. Now that looks more like it's an impulse down into the C. Again, it's just using what's there, just deductive reasoning. I don't want that on. Deductive reasoning. Okay, if it's not this, then that. Okay, if that's the 2, I'm looking for an impulse to come off of that. 1, 2 could be here, right? Could be that's because you can see a 5 in that. Could be, right? 1, 2. Oh, I'm way too big there. Oh, I'd put the 4 here, right? Maybe. Right, let's go down to something reasonable. Okay, let's take that 1 up a degree. All right. So I got a candidate here for a 1. So 1, shallow 2. Potentially now another 1. Because look, here's the big kicker, right? So just looking at the character of a wave. Well, that sure went straight up in a ripping hurry. So likely impulsive, greed. Now, what do? We're going. So does that look like it would be anything other than a 4? Well, it certainly looks corrective. So we're not progressing the trend. So we're just going sideways. We had sharp here. We get sideways here, right? Nice alternation. And we get one last little kicker before we started down. Now, that doesn't mean we're potentially done here. This could be another 1, 2. Well, shit, if I look at that, I'm guessing that's probably golden zone. A little bit through it. All right. So it looks like could be the start of something deeper. We are definitely, if I use the lowest low, which is what the algo would do. All right. So there's a wick through. So we lose the buy side at this degree on the 1 hour. So candidate here that we're just starting the 3 of the correction. Candidate. Oh shit. I don't want that. I want this. All right. Starting. Right. Okay. So that break is a bit of a tell. That's the market talking to you. Right. If I get something like this, I'd be looking for something deeper. So where's the next trade? Well, I wouldn't be a buyer here because I can now look at this and say, okay, most likely I've completed something here because that's 5, right? No, I'm going to assume there's not much argument as to whether or not that's a 5. Look and see if you could interpret that any other way. I don't really think you could. 1, 2, 3, 4, 5. So I'm looking for something to correct that off of the low, if that's going to hold as my pivot high. So where is the next opportunity here? Right? I'd be looking right here. But now I got to go all the way back out to the 4 hour and say, does that fit in all the way out here? Because I want to do my Elliott analysis out here. I'm just going down to that lower degree to clarify the count. Okay, if this is 1 and we're coming into the 2, well, remember, a resistance or support zone. Boy, that would be nice here because if I get a pivot here, I've got a micro algo working with me, right? I'm working with them. Okay, right into support zone. If I get the kick there, I'm looking for something big. 1, 2, 1, 2. That's a lot to assume. This is the only thing that would be a cause of hesitation here is how shallow that is. But with what's followed, you're kind of out of options. I suppose you could make a case that this could be 1, 2, the 3, 4, but you'd be having to pay close attention to the length of the 5th because you could have the extension in the 1, which is much like what Bitcoin has done, where we've got a 1, 2, 3, 4, 5, where it could be, or each swing is getting shorter in amplitude, would be potentially a tell that it's running out of steam. So if this is going to go 1, 2, likely not the 3. You can't eliminate that possibility. So if I draw it up, could be 1, 2, 3, 4, 5, right? So that would be, you'd have to measure 3 and have a pivot point or an alert somewhere where okay, I'm wrong. So more likely that this is a 2. Now, it's a function of how deep we go here to where you can really lean into that being a 1-2. But if it stays shallow and we hold the 38 and we go up again, well, there's that point where it's going to be longer than 3. We know 3, right? It's nice to have rules to guide you. 3 can't be the shortest. So it has to be 1-2. I mean, to me, right, when you're trying to make sense of the chaos, having those rules and guidelines, invaluable to me as a trader. Otherwise, I just think it's harder. Why make it harder on yourself? It's my view, right? So nice channel on this. She's got a target up here, which would make sense if that's going to hold as the shallow 2 into the 3. Oh, let's put the whole thing together, right? So 1, 2, here's the 100, not there yet. Here's the potential for the 3 would be up here, right, in this zone. 3, 4, 5 to get up here to maybe the 200 or the 2618. So she's got a big fat target here, but she's got that as either a 1 or a B. Could be either. We don't know just yet. Remember, it's just a snapshot in time. Right now, that's what that looks like. But we can't really be definitive until we see what happens here. But that doesn't mean you can't trade it, right? You don't get certainty. You just gotta stop looking for certainty. You don't get it anywhere. No such thing in the markets. There is no certainty. 1, 2, 1. We'll see. This here also, because it's so shallow, I draw a regression channel on that just to say, okay, I'm at 2 standard deviations. If I stay within that and I keep grinding higher, I get more conviction into the idea that I'm in an impulse and that I've got my good low. And then if I pull it all the way back out here, I've got a big target up there because right back to having rules and guidelines to guide you. This is my target, right? The move that failed to get there. Right, equal to or greater than. So could I get all the way up here? Well, if it's going to be corrective, it's possible, but that would be unusual that the B goes that high and goes beyond that. But if it's an impulse here, now I've got a target because I know that since I didn't make it, right, that's a reasonable target because that's what happens usually. Usually is not always, but that's a guiding principle here that we can work with. All right, good work, Trade Diva. But this is the tell down here, right? Not making the median line. Okay, let me keep moving. That's good work. Oh, shit. What do I got? Did she give me a second one? No, I got Marco D again. IDEX. Okay. Let me get that copy link. What do we got here? IDEX. Let me pop this over here. I'll give this a second. Let's reset that. Get his, I got 5-minute Bitcoin again. Let's see, do I have the right? No, let me try that again. I've got the one we just had. That looks right. Ideanomics. Okay, this looks interesting. Let me get over here so I can dig in here. Okay, right off the bat, right? So we can look at this and say, well, that's certainly 3, right? So how does that fit in with your 5s and 3s? Well, since that is 3, we can deal with that. Right now, you could make the assumption here, okay, if it's 3, right, that potentially we'd have a diagonal. So how would we start to qualify? Well, you can see what he's done here. So he's using this length projected from this, and we get, to the tick, right? So that now looking here, there's the 382 coming down. So if it's going to hold as an impulse, let's see. So this is, I see what he's doing. Okay, so he's got this low to this pivot. Here's the 38, which he's, okay, so here's what he's doing. Right, it's a support zone. Okay, so prior support here, got a little wobbly. Bring that back into it. Resistance becomes the support. Here's a good example, right? Why you don't buy the breakout, you wait for the retest, then it goes. looks like that is you're kind of stuck with this because so again, working backwards, I can go, well, there's the 3. So that process of elimination would lead me to think B here. I'd want to measure to see how that looks relative to the A. Jesus. Get that pivot. Jesus, I never get that on the first click. 1, 2. How do we look? There's the 618. All right, so we get a bit of confluence here. So we've got the structural support here. We've got the 382. He's taking swing low to swing high. Now remember, in a diagonal, there's 2 places to look. There's the start of the 1 through the pivot of the proposed 3, right? The ideal spot for a diagonal would be the 50. Now, that doesn't mean it must come to the 50, but that's an area that you would want to be paying attention to. Now, we'd be noting here that the 3 is shorter than the 1. So already it's not ideal, right? So if we're coming off of this low, you'd want to see a leading diag. So 3 would need to be longer than 1. So it's not ideal, but if we go up here, you're likely going to call that a 5. Now we're not. So if I go here to here, that's 38. If I go here to here, that's the 50. Now, but that's the 2 through the 3. So I'm starting to build confluence here. So if I work from this pivot, I'm at the 50. If I do it from this pivot, I'm at the 38. Right? Nice confluence point building here. I've got structural support. So I see all of this and I start to think, well, okay, let's look from the absolute low, right? So I got a nice, see how they're all stacking up here. And then I've got the swing of A projected from B. I got the 100 is down here, but the 618 is right there. So I've got this huge cluster of fibs here, in addition to the structural, just looking at price action. So do I want to trade that? I might be curious. Shouldn't have any indicator here. Don't have any indicators on that. Well, that's there, right? There's the, right? What is it? Right? Just a 3, right? But that's barely breaking, right? So really you'd call that a double bottom, but there's all it is, right? Just all it ever does, 3s. There's the 3. Now, can we get off of that? If you're not in there, I'd look for 5 to complete. We're on a 4. Well, you might have that actually. 1, 2, 3, 4, 5. Okay, so that's a good start here. It's not bad actually. I'm out here on a 4-hour. Okay, we don't overlap. That looks very 4-ish. Looks so probably A, B, C into the 4, but we don't overlap. So that's a bit of the tell. Deep on the 2. There's the 5. So if I'm watching this now, we don't know that pivot is in. We can't confirm that until we get a deeper retracement. But there's a candidate. Where would I be looking for the 2? Right there. Now I don't want to look left. Do I have anything there to work with? Not really, right? You might look at this, but we've double bottomed here. So that might play, right? So we get a little break. Now we're through and I come back to test from above. I actually kind of like that now. So if we get a little 3 to come back here. Now look, I'm working off a prior support here. Was the support, what now the resistance, right? Breaks as resistance. Now we're coming to test it as support at a 50. Now, if I get that, I got a target. Now I can do the same thing, right? Same thing every time, always, right? Where's the count? Where are the fibs? Where's the geometry? Can I get that to play? Well, there's 80%, could be here, right? We don't know, right? Could be here, could be here. I've seen them take 2 years and still get there. As long as that pivot holds. There's your first target, second target, third target. If you get that, now you know where you are. 1, 2, 3. Most probable. Doesn't mean that it couldn't go down here. That could be an ABC, right? You never know, right? But the only way you have the conviction to take the trade is the context. What came before it? Is this likely to be an impulse? Now, right there, you don't know if that's ABC or 1, 2, 3 without the context. What's most probable here is that that's a 3. So I'm sitting here waiting for that to come. 5. Now I know where I am. Okay, now I get another 5. Okay, I made the median line. Look at that. I made the median line twice. Now, what am I waiting for? Right? There's a logic to it. Deeper, looking for there's a logic to the whole process. Doesn't mean you're not going to get stopped out more than you're not. But in terms of, you want to be here to catch these. Right? This is the one you're looking for, the big rip in the third. But you don't stay here and go, oh, that thing's going to the moon. You got to have a target. You say, well, hey, if I get that 4, I got a chance to go again. Now, I've already banked a nice profit here, so I don't want to give it all back. But there's you can't go, oh, I made some money there, so on to the next one. I've got an account here that's underway. I can milk this. Oh, I could be wrong, of course, right? I could give back a portion of it, but I certainly would make more here than I lost if I bought here and took a stop here. I still am in profit. But if I get this, now I'm getting the double. I got the 3 and the 5. Now, I wouldn't be necessarily a seller here, right? If we've got a trend, we don't necessarily want to try and get every retracement, but if it retraces deeper, I'd buy again, because what could I do there? If I get a 2 there, then the whole process starts all over again, just at a larger degree. Same thing, same 80%, same structure, same context, same reference point, same structure. Well, shit, put the volume profile on here. You just look at this and say, well, there's going to be a big cluster of volume there from all the time that we spent here. I don't have to put it on there. I know it's going to be there just from looking at all this, right? We're not going anywhere, right? That's building up a big node, high volume node over here. So if we come back, that's probably POC, and then up you go again. When you've got one that's playing ball, right? That's playing Elliott ball, you want to milk that for everything you can, because now, hey, I know where I am. I know what's likely to come next. Why would you go, fuck that, I'm off to the next one? You milk them for all they're worth. At least keep it on your radar to see if it's going to continue to play Elliott ball. I think that's all we got, Monty.
Yeah, we got 25 watching, and that's all the charts we've had. But
okay, if anybody has something, happy to look. Otherwise, we'll wrap early. I'm traveling today, so it just as well for me because I got to get out to the airport this afternoon.
Yeah, we might as well wrap it there. We got a few admin things to do, and since we got to run. So
yep. All right, guys. Hopefully you get little nuggets out of these. I try best I can to try and teach, and rather than just, okay, here's the next setup, right? Hopefully you get something a little bit beyond that. So next time you're looking at something like this, hopefully some of the things that I'm telling you will be in the back of your mind, and maybe you'll take advantage of some of it. All right, guys, let's see. My partner, Monty Crypto, is on with his very unique style, which is very different from mine. Well, I shouldn't say that, right? It's support and resistance. He's not as focused on labeling all the swings from an Elliott perspective, but if there's a 5, he's going to call it a 5. If we come down to a support zone, I don't want to steal anything from his unique approach. I'll let him teach it to you, but it's a great alternative to people that are either struggling with the Elliott wave or they're not drawn to it. If you're not drawn to it, it's not like we can't offer you another approach to the market. So I do think if you're staring at a 5 and a 3, if you don't want to label it, somewhere in the back of your mind, I hope there's the thought, well, that's probably an impulse. If that's a 5, it's probably going to be followed with a 3. But it's a really original approach, particularly to the use of median lines and geometry, that I would strongly encourage you guys to take a look at, because it may just fit with what you're looking for. If all of this Elliott work doesn't attract you, we got a nice alternative for you. So catch that tomorrow. I think he does. Monty, you're doing any assets, right? I know it's mostly crypto, but you'll take anything.
Yeah, I'll do whatever they post.
Okay. Okay. Right. So you can see the point, what you should glean from that comment is that the asset doesn't matter. Nope. A chart's a chart, right? They all trade the same way, right? So with that, I encourage you to participate tomorrow. I think you probably start about 9:30. I'm actually out until Friday, so we're going to do Bitcoin Saturday. So I'll do something special on Saturday since I'm not back till Friday afternoon. But again, hope you guys get something out of these. We appreciate your participation, and we'll wish you a good afternoon.
Yep. Thanks, everyone, and we'll see you tomorrow morning.